The global economy on the brink, navigating the perfect storm of protectionism and recession. The global economy is teetering on the precipice. A perfect storm of escalating trade wars, punitive tariffs, and retaliatory actions threatens to plunge the world into a recession of unprecedented proportions. Last week's market turmoil, witnessing a staggering $5 trillion wiped off stock indices, losses unseen since the initial shock of the COVID-19 pandemic, serves as a stark warning. The opening salvos have been fired, and the battlefield is the global marketplace. Donald Trump's Liberation Day tariffs, far from liberating markets, have unleashed a maelstrom of uncertainty and fear. The lack of any indication from the Trump administration of a retreat from this protectionist stance only exacerbates the anxiety gripping investors and policymakers alike. Analysts are issuing dire warnings, predicting persistent market volatility and a heightened risk of full-blown recessions across the US, UK, and the European Union. The impact is immediate and devastating. The automotive sector, a bellwether of global economic health, is already feeling the pinch. Jaguar Land Rover, for example, has been forced to halt shipments to the US, a crucial market representing a quarter of its annual sales, in response to a 25% tariff on UK steel and cars imposed by the Trump administration. This single action ripples outwards, affecting not only Jaguar Land Rover's bottom line, but the broader UK economy and countless interconnected industries. The situation is further complicated by China's robust response to Trump's aggressive tactics. Accusing the US president of bullying, China has retaliated with a 34% tariff on all goods imported from the US, escalating the conflict and deepening the global economic uncertainty. This tit-for-tat escalation creates a vicious cycle, where each punitive measure triggers a retaliatory response, further destabilizing markets and dampening global trade. Across the Atlantic, European leaders are united in their condemnation of Trump's actions. The French president, Emmanuel Macron, has reportedly called on French businesses to curtail investment in the US, a significant blow to transatlantic relations and economic cooperation. Ursula von der Leyen, head of the European Commission, while advocating for negotiation, has acknowledged the inevitability of retaliatory measures. The EU is poised to unveil its own tariffs on a range of US consumer and industrial goods, including iconic American products like orange juice, blue jeans, and Harley-Davidson motorcycles, as early as mid-April, in response to previously announced tariffs on steel and aluminum. This counteroffensive, while justified in the eyes of many, only intensifies the downward spiral of protectionism and trade friction. The UK, already grappling with the economic fallout of Brexit, finds itself caught in the crossfire. The potential for a significant economic slowdown, exacerbated by global trade tensions, casts a long shadow over the nation's future. Keir Starmer, leader of the Labour Party, is expected to prioritize an economic reset, potentially reconsidering previous pledges to avoid tax increases in anticipation of a global economic downturn. This suggests a recognition of the severity of the crisis and the need for drastic measures to mitigate its impact. The consequences of this escalating trade war extend far beyond financial markets. The ripple effect threatens to disrupt global supply chains, increase the cost of goods and services, and ultimately stifle economic growth. The potential for job losses, both directly in affected industries and indirectly through knock-on effects, is significant, further fueling social and political instability. The international community faces a critical juncture. The current trajectory, characterized by escalating tariffs and retaliatory actions, points towards a deeply concerning future. Finding a path towards de-escalation and restoring a rules-based multilateral trading system is paramount. Failure to do so will likely result in prolonged economic hardship, impacting businesses, consumers, and governments worldwide. The need for coordinated international action, based on diplomacy and compromise, is more urgent than ever. The alternative, a prolonged period of global recession marked by economic instability and social unrest, is simply too grim to contemplate. The time for decisive action is now. The stakes are nothing less than the global economy itself.